Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend, or I'll hit you in the face with a brick. What? I can't say that? Today we're going to be looking at the Pennant chart pattern. This is a continuation chart pattern. This can happen in an uptrend or a downtrend, but there's a couple of items you need to note regarding it. It is a short-term formation, basically meaning it's going to be 4 to 8 weeks long. They can go longer, but typically 4 to 8 weeks is what's normally going to happen. The first thing that you're going to find in this particular pattern on a bullish side is that you're going to have a strong advance leading up to it, and that you will have a breakout or a rally off of support, something, and that rally will be supported by substantial volume. That's required. Okay, the Pennant pattern forms this formation right here, this symmetrical triangle, forms as the consolidation phase after that move, and it marks the middle of the overall move. Okay, so whenever you see this formation after a strong rally, which could have gaps in it, strong rally on strong volume, then you would look for this consolidation period as only the middle of the move and expect more to the upside, but you would want to wait for that before you bought into it. You'd want to wait for the breakout. The breakout is actually going to be the confirmation of this formation, and you get the breakout when price closes above the upper resistance line. This being the upper resistance line right here, drawn upon the tops of this price activity. Drawn upon the bottom would be support, and you just watch these two points converge until price activity finally breaks out. It is quite common to find volume decrease substantially during this consolidation phase of the Pennant formation. It should be also noted that when you take the price activity from the high of the Pennant down to the original or previous support resistance line, that is known as the pole, and it can be used as a gauge or target for how high you expect price to continue once the breakout does happen. In this particular case, take $17.98 to about $12. Do the math and add that same distance to about here, and you get a kind of a price target, how high you expect that to go. Again, this particular chart pattern, the Pennant chart pattern, can be seen in an uptrend or a downtrend. It marks the middle of the move, and the most important element of this, in my opinion, is going to be the volume behind the initial advance right there. If that's not there, I wouldn't trust it to continue. If it is there, then I would be betting highly likely that you're going to have a breakout continuation, even if only to see how much higher they can go on lower volume. There will be an attempt. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.